U.S. investors, what if you never had to ever pay taxes on any of your profits ever again? Yes, you can with the Spendthrift Trust. It's legal. It's in the IRS Tax Code 643B. Hi, my name is Sally Gimmon, and I became a real estate investor in 2018 when my mom got sick. In 2019, when I wholesaled 7 bank-owned properties nationwide, I paid off $184,000 in debt and had $50,000 in my bank account to pay short-term capital gains. Well, 2020, COVID struck. Everything shut down because we were using courthouses and they shut down during COVID. And on April 1st, my 3 properties that I had did not pay me, so I had no money coming in. And on April 4th, my CPA called to say, congratulations, I made so much money in 2019, my tax bracket went from 22% to 24%, and I owed $94,000 in short-term capital gains. Yikes, I only had $50,000. That set me on a quest to learn how the rich save taxes. I now work for a private law firm that was started 78 years ago by a Harvard Law professor. He wrote 5 very specific trusts to save specific taxes. In this video, we're only talking about the Beneficial Spendthrift Trust. It is for all investors. You will stop paying the following taxes. You will no longer pay capital gains when you sell something at a profit. You will no longer pay interest income taxes if you're a passive investor. You will no longer pay dividend income taxes if you're in the stock market. You will no longer pay rental income taxes if you're a real estate investor. And you'll no longer pay royalty income taxes if you have talent or NFTs. It's legal. It's in the IRS Tax Code 643B. I want to teach as many U.S. investors how they can save taxes just like I did. So just to go over this, everything except for long-term capital gains and royalties are taxed between 10% to 37% depending on your tax bracket. Short-term capital gains are affecting you if you are wholesaling, fix and flipping, if you're doing auction houses, tax liens, maybe you're selling crypto, you're doing options trading, or if you're a forex investor. Long-term capital gains are a year or more and are either 15 or 20% when you sell your business, sell an investment property, or you sell a baseball card. Interest income taxes, again, are going to affect you if you are have passive income. Maybe you're in mutual funds, you're in a REIT, you're doing subject to real estate. One of the deals I did for subject to, true story, I made $145,000 at 24% tax bracket. I got to save $34,800 in interest income taxes. Now I have 12 notes, which are interest income taxes. You're doing seller financing, you're doing creative financing, and yes, forex investors, you get taxed twice. Capital gains and interest income taxes. With dividend income taxes, maybe you're in the stock market, you're a day trader, you're doing futures trading, you're doing commodities trading, or you're living off of dividends. One of my clients, a husband and wife who did very well with dividend stocks, we were able to save them over $72,000 a year in dividend income taxes. And then also, he was 70, she was 68. It saved them on the IRMA surcharge on Medicare if you're on 65 or older. Rental income taxes. Yes, if you have short-term rentals like Airbnb, vacation rentals, maybe you have 5 doors, 10 doors, 20 doors, 100 doors. Maybe you have commercial property. Maybe you have multifamily property. Maybe you have apartment buildings, or you're doing Airbnb arbitrage. Yes, you can move a property with a depreciation schedule into the trust. Yes, you can move a property with cost averaging into the trust. And then finally, with royalties, are taxed a little bit less, between 7 different layers, but between 10% to 35%. And they affect you if you're an actor, an actress, a musician. Maybe you're an author, an artist. You have NFTs. You have copyrights, patents, or intellectual property. You can be in 3 different subjects, 4 different subjects, and no longer pay taxes. Besides saving U.S. taxes, And in 43 states, state income taxes on the same levels, you're going to save in 3 very important ways. Number 1, you're going to leave a legacy for future generations. Number 2, you're going to keep your information 100% private. When I became a real estate investor, they told me I needed an LLC for every one of my properties. They did not tell me 40% of LLCs, S Corps, and C Corps get sued every year. Yikes! That's a lot. That's a high number. And number 3, talking about lawsuits, all lawsuits become frivolous and go away. I can't stop you from being sued, but if someone sues you, you send the first page of your Beneficial Spendthrift Trust to their attorney, and they know they can't get money from a stone. This sounds too good to be true, but it is an IRS Tax Code 643B. If you talk to your CPA or financial advisor and they say, "Ooh, I have a memo from the IRS," it's dated August 3rd, 2018, where yes, the IRS wrote a memo saying they don't like Tax Code 643B. Well, guess what? It's a memo. They can't change the tax code. Only Congress can. Too many presidents, too many senators, too many congresspeople, and their super PACs know about the Spendthrift Trust. Now you know about the Spendthrift Trust. Just to give you an idea, if you are, for me, my first property in the trust, where I made over $44,000 at 24% tax bracket, I got to save $10,364 on that one property. Since having this trust, I've wholesaled 28 properties. I have 12 notes. I have 3 rentals. I have 5 seller financing properties. I have a crypto bot. And because I work for the law firm, I get paid into my beneficial trust because it has copyrights on it and I don't pay royalties. I have a free masterclass at www.thetrustisyou.com. Go out there, watch it, learn the secret of the rich, and set up a free 30-minute tax breakthrough session with me and no longer pay capital gains taxes, interest income taxes, dividend income taxes, rental income taxes, and royalty income taxes year after year, generation after generation. Thank you for watching my video. Year after year, generation after generation. Thank you for watching my video.